Chakri, is there a change of opinion, change of heart, change of numbers, and change of price trend also in some of the consumer tech and fintech stocks? The way a Zomato and a PayTm have made a comeback from the recent lows, it's quite extraordinary, isn't it?
Indeed, if you look at, to put a little bit of history into context, if you look at 1998 when there was a tech boom, at that point in time, it was technology companies in the US which were doing well, and the rest of the other sectors in the economy were not doing well. Now, you flip it around now in this year, is basically the consumer tech names in the US had overhired, and likewise, Indian consumer tech companies had overhired. And as a result of that, the profitability came down, margins came down. But the other sectors in the US are actually doing well. Unemployment is very low. 11 million jobs are still unfilled. Why this is important is therefore Indian IT services will do well. On the other hand, consumer tech in India still has to go through some of the layoffs and cutting costs, so to improve their margins. And also they're going to scale back on their growth expectations of growing their top line, which means the multiple that you gave in the past, you'll give a lower multiple now. So I think at best they are positional investments and would not be a long-term buys.
Positional investments and not long-term buys. That's the view coming in on some of those new age tech companies. But wanted to also get in your take and outlook then, Chakri, as to where you stand when it comes to the entire, PSU financial space, given the fact that, there had been so many naysayers in the past, but then that sector went on to prove its might, rewarding shareholders and how. Do you believe that now that rally has fizzled out, or is there still more steam?
I think there is a lot of steam in PSU banks, especially, and also within some of the other PSU names like Bharat Electronics, etc. With PSU banks, so simply because when the government is in the budget spoke about a 33% increase in capex, that funding is largely going to come from PSU banks. So the private capex is still not picked up, is unlikely to pick up. Capacity utilization for private sector is still only about 75%. Only when they hit that 80%, 85% mark, as private companies private sector starts doing capex. So against this backdrop, because of recent market turmoil, many of the SBI, Bank of India, Canara Bank, all the PSU banks, they've all corrected very significantly, trading half-time book. So I think with an outlook, and that too, if government is going to be spending, that is good credit. It's unlikely to turn an NPA for the banks. Therefore, I think their outlook remains strong. So I would buy into the current weakness.
Let's look at Adani Group of stocks and what a comeback it's been in some of these stocks. Now, Adani Enterprises on Friday, which is not once upon a time, last Friday was almost at 1,000 rupees. A 1,000 rupee stock has become a 2,000 rupee stock. The 7-day change in Adani Group of stocks now, especially Adani Enterprises, is 27%. It is still a big eyesore, but 27% loss in Adani Enterprises just tells you that how steep the fall was and how sharp the recovery is. Adani Ports is down 2% in the last 7 days. Let's also look at the YTD change in Adani Ports. It was closer to 750, 800. So if you look at, frankly, the collateral damage from the beginning of this year, it's about 26% now. Chakri, have you been shopping in any of the Adani Group of stocks?
Adani Ports, as you mentioned, clearly looks good. And in fact, we've been adding in Adani Ports. Because if you look at the company and if you look at some of its parts, the ports business, if you apply a 10, 11 times EBITDA, that itself comes to like a 750, 800 rupee price. On top of that, they have a land bank. And that, even you ascribe a very low valuation of, maybe 4-5 million. But that would also add to maybe another 10, 20 rupees. Then on top of that, they're under construction ports in Colombo, in Kerala, etc. So if you all that, you assign a low multiple of the equity invested. You add up all these things together, it's well north of close to 1,000 rupee stock. So even if you just look at Adani Ports, and let's say that you discount the others, the ports business, I think that in itself is sufficient, probably 30-40% upside from current levels.
First the fall and now the comeback. What is the real deal with Adani Group of stocks? As a trader, somebody who really wants to trade without a view on the fundamentals, P multiple, all the mumbo jumbo which has happened in global media, should one venture into Adani Group of stocks? Is the risk reward ratio, Naresh? I'm going to focus only on risk reward ratio, favorable for a trader.
Absolutely not. The bounce has been pretty sharp in a lot of these Adani names. And there is a possibility of further sell-off coming in if the MSCI weightage is reduced. So in this case, again, like I've been saying, the only two stocks one can actually look at a buy on dips is Adani Ports and Ambuja Cements. So if we fall to 350 levels on Ambuja Cements, that would be an entry price going forward. Adani Ports has already moved up 50% from the lows, but if that goes towards 500, 530, that is the price point you want to get in. The rest of the names are still overstretched, even on a basis of, say, from pre-COVID to the prices right now. So a lot of these stocks are still up 5x, 10x, 20x from pre-COVID prices. So one has to be careful here. There will continue to be volatility. We've seen a 100% move in Adani Enterprises. So I would be wary of all the Adani names because it's difficult to trade them. So the only thing one can do is on a sharp decline, look out for Adani Ports and Ambuja Cements.
Got L&T Defense as well in the spotlight. The company has signed that contract with the Ministry of Defense for 41 indigenous modular bridges, the cost of worth which is over 2,500 crore rupees. This is going to be a big shot in the arm for the overall defense order book as well for the company. Chakri, just wanted to get in your thoughts on L&T in particular on the back of this order win and where else you're seeing potential within the defense space.
L&T clearly very well positioned. Valuation sits on the side. The order book, while it's a large one, it's in the scheme of things, it's an okay order book for L&T, but it points in the right direction. The multiples are pretty much in your favor. So outside of this, I think Bharat Electronic, because actually on L&T, 1 in 4 projects or 1 in 5 projects in India actually go to L&T. So if you believe that capex is going to go up, which we do, I think L&T one should buy. Then outside of that, Bharat Electronics, clearly it's expanding its range of products and its multiples have corrected. Its growth is intact. So I think clearly Bharat Electronics is a buy.